For more on the gold space, I'm very pleased to welcome Perseus Mining Managing Director and Chief Executive Jeff Quartermaine, who joins us live from our Sydney CBD studio. Jeff, thanks very much for joining us on the program today.
Thank you for having me.
Let's kick it off with the gold price, because we know it's sitting here at about the lowest levels of the year. You being a gold producer yourselves, obviously leveraged to moves in the gold price. It seems like it's really taking a back seat here, perhaps waiting for something like, economic data or political changes maybe in the United States. What's your view on the gold price from here? Do you think it will continue to trend lower?
Well, look, to be perfectly honest, I've really no idea, but the thing is that the current levels, it's quite comfortable for us. We're generating fairly strong cash margins, about $433 per ounce US last quarter, $600 Aussie. So at these levels, we're not too concerned around the gold price. But as to the future, I mean, there's a lot of very good judges out there who are thinking that this may be a temporary respite and that there's enough out there in the global economy for gold to have another run later in the year.
I mean, how do you kind of position yourselves? How do you manage that risk when it comes to gold price moves? Do you sort of take out any kind of hedging strategies? How leveraged are you to volatility?
No, look, absolutely. We certainly do hedge, and we have always hedged our business. About 30% of our forecast production is hedged, and we're very comfortable with that level. And we've been doing it consistently now for about 5 or 6 years. And as a result of the strategy that we employ, we're delivering our gold consistently above the spot price. So we think it is important to have that downside protection just in case things go awry. But of course, if the gold price goes up, then we sell 70% of our gold at much higher prices. So what we're doing is running a business. We're professional managers. Price risk is the biggest risk in our business, and it would be somewhat foolish to ignore that and not to take some downside protection.
Hi Jeff, it's Nathan from Blue Ocean Equities. I think you're exactly right. I believe that the market at the moment is on a risk-on trade, so you see weaker gold price, but the seasonality tells you around end of Q3, Q4 generally is the perfect time to get into the stocks, and I'd expect gold stocks to do quite well during that time. The question I have is more the fact that the larger caps in the sector, the Northern Stars, the Newcrest, or not, I suppose Newcrest, Northern Star, Evolution, Saracens, have attracted pretty high multiples. They're pretty sky high. There's not a lot that can go wrong with them before they get smacked. For the mid to the smaller guys like yourselves, you're not attracting that multiple yet. Where do you think it's purely on the scale side of things, or it's more the cost side of things that the market is looking for to get your, like Perseus has been pretty well managed, but to get the multiples up to the Northern Star standards?
Now, look, I think you need to recognise that Perseus Mining is a US dollar denominated company. We sell our gold in US dollars, and most of our costs are in that currency. So we haven't benefited from the Australian dollar margins that some of our more fancied peers have. However, one of the things I would point out is that a lot of our Aussie competitors, their margins are slowly eroding as inflation comes into the business. What we've been doing, on the other hand, is bringing our cost base down. And last quarter, for instance, our all-in site cost average across the business was $850 an ounce, which gave us a very healthy margin. Now, we've been slowly working at our company, turning it around, putting ourselves into a very strong position, while our Australian peers have been enjoying their moment in the spotlight. We think that it's fairly clear that they are highly priced, but when fund managers decide to switch out, we offer a perfect alternative for them, which is, at this stage, we're relatively undervalued compared to those companies.
Jeff, it's Nathan again. Do you think the sector, especially in the mid to smaller end, is ripe for M&A, given we are in that cycle where M&A is happening in a number of sectors? Gold stocks, businesses have done well. Perseus is, one of the better managed businesses. So you would assume, given the value discount, especially to Canadian players, global guys will be looking at consolidation. Do you think the sector is setting up for a consolidation game?
Well, look, a lot of people say that, but there's a lot more to it than that. I mean, from our perspective, for instance, the asset quality needs to be there, the jurisdiction needs to be there, and the management teams need to be there. So it's not as easy as some people would say in terms of making consolidation happen. Now, having said that, of course, if you are able to acquire wisely, as we did back in 2016 when we took over Amara Mining, you can set the company up very nicely. And we would think that We're about to start building our third mine in the next couple of weeks. Beyond that point, we will be looking to the broader market to see what acquisition opportunities are available to us. But of course, we don't need to do anything, which means that we can sit back and choose wisely. It's very easy to make an acquisition. It's not so easy to do a very good one, and that's what we're seeking to do.
All right, fantastic. Jeff Quartermaine, unfortunately we're out of time, but we do really appreciate you joining us on the program today. Thank you so much.
Thank you very much.
Jeff Quartermaine, that was Perseus Mining Chief Executive, joining us there.